Trapped by a 3% mortgage? How to afford an upgrade in 2026? You're sitting on a 3% mortgage rate. And for many homeowners, that's the best financial decision you ever made.
It's the Mortgage 101 podcast where real talk meets home and life.
But there's a problem. You don't love the house anymore. Maybe your family grew, maybe you're working from home now, maybe you'd like to move into a better school district. But every time you look at today's mortgage rates, you look at the same thing. I'm not giving up a 3% loan. So you stay put even though the house doesn't really fit your life anymore. Here's the thing. In 2026, there's actually a few smart ways to move up without wrecking your monthly budget. And today, I want to walk you through what those options can look like. Number 1, acknowledge the pain. Let's just say it out loud. Giving up a 3% mortgage rate feels very painful. It feels like you're making a bad financial decision. And honestly, that's understandable. A 3% mortgage rate is historically low. Rates like that don't come around very often. But there's a deeper question most homeowners don't ever ask themselves. Is your mortgage rate helping your life? Or is it keeping you stuck in a house that no longer fits for you and your family? Because at some point, your home needs to match your life in the life you're living today, not the life you had 3 years ago. Number 2, the equity flex strategy. Here's what many homeowners overlook. While mortgage rates went up, home values also went up. If you bought or refinanced in 2020 or 2021, there's a good chance you're sitting on a lot more equity than you realize. For some homeowners, that could be $100,000 or $200,000 or maybe even more. That equity creates flexibility. Let's say you sell your home and walk away with $175,000 after paying off the mortgage. Instead of borrowing $600,000 for the next house, you might only need to borrow $425,000. Yes, the interest rate might be a little higher, but the loan balance is much smaller, and the smaller loan balance can make the payment far more manageable than people expect. This is what I call the equity flex strategy. You're trading a lower interest rate for a much smaller mortgage balance, and sometimes the math works out better than homeowners think. All right, number 3, the accidental landlord strategy. Now let's consider another option. Instead of selling your home, what if you kept it? A 3% mortgage today is incredibly low compared to current rental prices in most markets. In many situations, homeowners can rent out their current property and cover the mortgage, the property taxes, and insurance, and sometimes even generate a little cash flow. Now that home becomes an income-producing asset, and that rental income can help offset the payment of your new home. So instead of losing your 3% mortgage, you keep it. This is often called the accidental landlord strategy. It's not the right move for everyone, but it's a strategy many homeowners don't realize they have. So you might be wondering, if I'm going to buy another home, I'm going to keep this one, where do I come up with that down payment? That's a great question. We should talk and come up with a strategy based on your specific situation, because it's not one size fits all, and it's why we lenders exist. All right, number 4, the life factor. Let me ask you a different question. Is saving a few $100s a month in interest worth kids sharing rooms when they don't have to? Working from the kitchen table instead of having a home office? Driving an extra 30 minutes every day because you want a better school district? Feeling cramped in your own home? Look, the math matters, but so does quality of life. You can't put a price on things like more space, more comfort, less stress, more time with your family. Your mortgage rate is just a number. Your family's lifestyle matters more than that. The real answer is a custom strategy. The truth is, there isn't one answer for everyone. Some families should stay where they are. Some families should sell and move up. Some should keep their home as a rental and buy something new. But the biggest mistake I see homeowners making right now is doing nothing, simply because they're emotionally attached to a 3% mortgage rate. In many cases, you can actually have more equity, more leverage, and more options than you realize. You just need to look at the numbers. Don't let the math equation dictate how your family lives. You're likely to have more equity and more options than you realize. If you want to see what it might look like to sell your home and upgrade in today's market, I'd be happy to run a move-up buyer's analysis for you. Reach out to me. Call me, text me, DM me, any way is most comfortable for you. And if you want to hear Anthony and me do a deep dive in the rent versus sell strategy, come check out the Mortgage 101 podcast. I'm Manly. Thanks for watching.